Hello. Today we're going to talk about the actual process of opening a 529 education savings plan. If you haven't seen my videos before, I'm Lucas and I make videos about saving money and investing. You can watch my previous video from the link in the description where I explain what a 529 plan is and why it's a useful tax-efficient tool. Also, know that I'm not sponsored by or affiliated with any company or fund. With that settled, we're now going to discuss how to open an account, where to open it, and considerations selecting the investments in the account. So stay tuned. 529 plans are tax incentives offered by states, and therefore some states team up with a financial institution to offer the tax-efficient investment. Other states don't offer a plan, but allow you to deduct from taxes investing in plans offered by other states. Keep in mind that some states will not let you deduct 529 contributions from state taxes. So, as I discussed in the previous video, check with rules specific to your state. Most of the time, you're better off investing in the plan offered by your state, but that's not always true. When choosing equity portfolios, you're choosing higher risk and looking for higher return. That can be US stocks for large or mid-sized businesses and can be exposure to specific industries. It can also be exposure to other globally developed equity markets or emerging markets. At the other extreme, you have bonds, which is debt issued by governments or companies. They are less risky but also have lower returns. The least risky bond investments are to highly rated government security, like debt from the US government. And otherwise, you can seek exposure to company debt, which pays more but is higher risk. In a future video, we will explore equity and debt asset classes in more detail. Finally, you can invest in a basket of assets that include many of these categories and diversify. You can choose both equity and bonds to seek returns, but manage the downside risk. The key is to understand how much risk you're willing to take for the higher returns. The earlier you invest and the longer the period until you need the funds, the more comfortable you will be at riding the volatility in the market. So, once you find the 529 plan site for your state, you'll select to create an account. I'll show you how it works in my home state of New York as an example. You will provide your name and create a username and password. Follow 4 easy steps. You verify your identity and provide basic information about yourself. You will choose who you are saving for. You set up your initial and recurring savings. And you select how you would like to invest, either by linking to a bank account or by sending a check. Once you complete these steps, the important part is choosing what kind of investments to make. In the New York Fund, for example, you can contribute up to 5 portfolios at a time. There are 2 general categories of portfolios. A list of target enrollment portfolios that automatically adjust the assets depending on when you need the money available, or from a list of individual portfolios, making your own allocations in stock funds and bonds funds, depending on your own risk appetite. For legal reasons, I cannot recommend which portfolios to choose. I can only advise that you make decisions, 1, based on whether you will devote time to readjust the portfolio yourself, and 2, based on your own risk appetite. For New York, the target enrollment portfolio invests in Vanguard mutual funds using an asset allocation strategy designed to become more conservative over time. The target allocations adjust as your child approaches the date they are expected to enroll in school. Portfolios are rebalanced every 3 months to incrementally decrease exposure to stocks and increase exposure to bonds. The funds continue to adjust to reduce risk when the funds are needed for school. This type of portfolio will do most of the work for you if you don't want to be concerned about choosing specific asset categories and don't want to be responsible for adjusting the risk yourself as you get closer to your child's need to have the money available. So, say your child needs to pay for tuition and other expenses in the year 2033. You just choose the target enrollment 2033 portfolio. Now, if you want to choose the portfolios yourself, you have a long list of options. In New York, you have 18 different portfolios to choose from that are equity portfolios, bond portfolios, balanced portfolios, meaning a combination of equity and bonds, and you will have also short-term investments that offer low risk but low return. And again, you don't just pick one portfolio. You can contribute each time to up to 5 different portfolios in the New York 529. And the following contribution, you can choose to change those portfolios. You can also choose to move funds from previous contributions to different funds. Just for illustration purposes, I show you here contribution choices for one period. You select a percentage of the contribution going to each portfolio, and as shown here, you can even combine the targeted year funds with the individual asset portfolios. For illustration, I chose to place 20% of the contribution in each of the 5 funds. It really is that easy once you decide on your investment strategy. And again, for the next time, you can choose to invest it in different funds, or even move the money around different portfolios you bought previously. Thank you for watching. I hope this video was helpful, and make sure to like, subscribe, and ring the bell, and watch out for future videos.